good, folks? Welcome back to Living Ishay Reviews. I'm Ishay, and today, instead of reviewing videos or news, I'm going to review life insurance. Everybody needs life insurance, right? Just like everybody needs health insurance, you need car insurance, you need to save money, you need insurance on your house, you need insurance to protect your property, all that. And the same way with life insurance. I mean, when you pass away, you expire, you need to leave whoever you choose, you need to leave them money to take care of, whatever expenses are involved with your death. Especially if you have kids, if you have a significant other, if you have a spouse, if you have siblings, you have parents, you want to leave something too. It's just an all-around good idea. I mean, you never know what's going to happen. You don't want to pass away and leave all kinds of expenses to your family members or whoever. So life insurance is always a good thing to have. Okay, so what is the difference between term and whole life insurance? Well, there are two significant differences. One is the length of the policy, and the other is cash value benefit. So term life insurance is set for a set period of time, a term. So a term could be 5 years, 10 years, 15 years, 20, 40 years. Term life insurance will only cover you for that period of time that you set, and it is renewable in most cases. But with whole life insurance, it is a permanent life insurance because it remains in effect for your whole life, over the time that you're paying for those premiums. Now, the premiums you pay for term life insurance, they go towards a death benefit that you will leave to your beneficiaries. Whoever you choose to leave that to. With whole life insurance, the premiums that you pay go towards a death benefit and a cash value account that you can access while you're still living. A lot of people don't know that. Some people get this information and they keep it in their lineage or their family, and a lot of us just don't know until today years old. So that's why I'm here to tell you about this. With whole life let me preface this by saying I am not an insurance agent, I'm not a salesman, I'm not an expert on insurance, just giving you a general definition and a general conversation about life insurance. I believe everybody should have life insurance, so just giving you this information. So whole life insurance is, again, it's a permanent life insurance because it covers you from the time you purchase a policy to the time you expire. And it's a traditional form of insurance that has a fixed premium rate and a fixed death benefit when you pass away. And like I said, they open a cash savings account. So most of these whole life insurance policies do have this vehicle where you can save money into that policy. Now the cash value, that's set. I guess that's worked out with the company, how much they put aside from the premiums you pay, but you're able to withdraw money or borrow from that cash value, like I said, while you're still living, and you can use that money for anything. Like some things, they say you can only use this money for a specific purpose. With a whole life insurance policy, most of the times when you borrow from it, you can use that money for whatever. And I'm not going to judge. Use it for whatever you need. But however, the money that you take out of that cash value account would be deducted from the death benefit should something happen to you before you pay it back, or before before the premiums you put into it add back up to what you took out. The value to the beneficiary: when the insured passes away, the beneficiary receives the entire face value of that policy, less any loans from the cash value. For payment schedules, most insurers will give you the option to pay the premium either monthly, quarterly, semi-annually, or annually. Like I said, with the whole life insurance policy, it's in effect until you pass away or until you stop making payments or you don't want it to lapse, because there's no sense in getting a policy if you're just gonna let it lapse. So make sure you're able to at least, anybody can afford monthly payments for insurance. You just have to discipline yourself and hold other spending back. Make sure you pay your insurance first. Okay, so whole life policy insurance can also come with dividends. So if you buy a whole life insurance policy from a mutual company, that's just like a finance company that sells insurance. So for instance, I have a whole life policy. I have a whole life policy and a term life policy. So I have both. But my whole life policy is from Mutual Omaha. So anyway, so if you buy it from a mutual company, you would be eligible to receive dividends, because those companies usually reinvest money that people from their policies into other financial vehicles, and they're able to earn returns on those investments. Pre-qualifications. Now, depending on your policy, you may be expected to answer some health questions about your medical history, and you may have to take a medical exam. But with whole life insurance, normally you can just sign up for it, answer some questions over the phone or online, and you can get the policy without taking a medical exam. I guess depending on the age you are, but mostly, because it's more expensive than the whole life insurance policy. Premiums are more expensive than a term life. So that's why term life is more popular with people, because of the price. But the whole life insurance versus the term life, it covers you the whole time that you're alive, plus you receive cash value benefits, whereas term life, you don't receive any cash value. So again, the pros of having whole life insurance is cash value, because you can borrow or draw a loan based on your amount that you have in that policy, or you can get a loan against the policy and you have to pay that back. Payment schedules, you have options of monthly, quarterly, or semi-annual, or annual when you want to pay those premiums. Value to beneficiary: when you pass away, the face value is paid to the beneficiary, regardless of how you pass away in a lot of cases. But every company has their own terms, so check that out. Dividends: you can earn dividends based on that company's financial performance. And as far as pre-qualifications to get the insurance, normally you do not have to take a medical exam, but depending on the company and depending on the person's age and health history, you may need to. But most cases, you can just sign up for it, pay for it, and bam, you got your whole life policy. Okay, so let's go to term life insurance. So term life insurance can be purchased for a set period of time. most cases up to 30 or 40 years, depending on your age. When that term ends, your coverage ends. So if you get a policy for 15 years, at 15-year mark, that's it. Sometimes you may be able to get that renewed based on a company, or it may be you may be able to convert that term life policy into a whole life policy. Again, depending on the company that you get. But they'll let you know months in advance before your term life policy is up and what your options are. So again, when comparing term life policy to whole life policy, the premiums for the term life policy is generally less expensive than the whole life premiums. Terms and medical requirements. So term life insurance, they pay a set face value, like when you sign up for it, whatever face value that you sign up for at that time, that's what your beneficiaries will receive. So yeah, like I said, typical range of terms are 5 to 40 years. Most people get the 20-year policy. That's the most common, according to the Insurance Information Institute. When you get a term life insurance policy, you will have to answer health questions or take a medical exam. Age limits. So many term life policies have an age limit, usually around 80, but different companies may have a higher age limit. So if you want to renew a 20-year policy at 65, they will only give you another 15-year policy, and then that's it. You're covered for another 15 years, and then that's why you should have a backup whole life. So premiums, the term life insurance companies base your premium on your health at the time. So that's why it could be as expensive as a whole life policy if you have some medical issues going on. But if you're relatively healthy, no major things going on, you could probably get a low premium. And they also base it on your life expectancy, so your age is also a factor. Term life insurance is much more affordable, again, for younger people. So if you're just getting out of high school, maybe in high school, college or whatever, get your term life policy, because when we're that age, the more reckless we are. So do your parents a favor, save them some headache. They're already going to be grieving, so at least you won't put any financial strain on them if something happens to you. Term life policy can have decreasing term policies attached to them. So what that is, a decreasing term policy decreases the death benefit over the lifetime of the term, usually at the monthly or yearly rate. So many people choose a decreasing term policy to provide coverage for a mortgage. And I think that may be the only way you can get a decreasing term policy, is if you're gonna use part of the money to pay your mortgage. Some term life policies, like I said before, they have option to be convertible or a return premium. So some term life policies are convertible, which means allowing you to convert that term into a whole life policy after a certain period without taking another medical exam. A policy with a return of premium feature, so that pays you back a portion of the money you paid after the term ends. So if you get a company where they're offering a term life insurance policy that after that, say you got a 15-year term policy, after that 15 years, they're gonna say, oh yeah, this part of this money you can get back. Hey, that's a good deal. But realize that your premiums are probably gonna be higher for this type of coverage. So just get a regular term life insurance to get started, and then I would move to a whole life insurance. So the pros of having term life insurance. So the terms ranging from 5 to 40 years involve medical questions, and it's likely they could skip the exam. So I don't know if that's a pro or not, depending on the company. You're either going to have to do one or the other, or both, the questions and the exam. Age limits, it depends on the company, but usually you can purchase a policy until you get 80 years old. And again, check with your company. The premiums, now that's the best benefit. The biggest pro out of this is lower premiums than whole life insurance. Now, the decreasing term policy, that's a good pro, because that provides coverage for mortgage. And the convertible and return of premium, those are great. You can get some money back after that term ends, or you have the option to convert it into a whole life policy at the end of that term. So more about term versus whole life. The major thing they have in common is the death benefit when you pass away. So if you have a $100,000 term policy, that beneficiary receives $100,000. Likewise, if you have a $100,000 home life policy and you continue to pay that until you pass away, that policy is going to pay $100,000. So typically the death benefit is tax-free, and the beneficiary can use that money for any purpose they choose. So you can say, hey, I'm gonna get this policy so y'all can handle my expenses, and whatever's left over is all yours. Or if you have all the money for the expenses, you just leaving money for the next generation. So that's a good thing. So why choose life? Why choose a term life insurance? Again, cheaper. If you are healthy, they normally waive a medical exam. If you're young and healthy, typically you can purchase a higher death benefit amount. So with the term life insurance policies, even though you can't like borrow against it or have a savings account with that, you can buy higher coverage. So you can buy like $400,000 policy and pay like $40 a month. You know, you can, so if something happens to you, your beneficiary gets that $400K all to themselves. And there's a flexible choice of the terms in which you can get that policy for. So with both types of insurance, you'll pay a lower premium if you purchase a policy while you're young. If you wait until you're in your 60s, you're gonna pay a higher rate, or you may not qualify to get it due to any medical conditions that may come up. So when comparing term life insurance to whole life insurance, you wanna look at the duration that you're needing. Whole life continues to cover you until the end of your life. Term life only for that term of the policy. Like I said, pre-qualifications, there's a couple of factors for that. Savings benefits, savings account feature of the whole life insurance sets it apart from the term life insurance. Term life insurance policies could include a return of premium rider, which allows you to recoup some of that money that you paid into that. But again, you got to check with your company to see if they have that feature. So which is better, term or whole life? Well, it depends on how you're planning your future. So it's most important to choose a life insurance policy that aligns with your future financial needs and goals. So to determine how much life insurance you need, you might want to look online for a life insurance calculator to get a ballpark figure, or talk to a financial planner, or try to like add up what your worth is right now, how much assets you have versus how much liabilities you have. And you can kind of either double that, or depending on what age you are, just set that policy amount based on your assets and liabilities. Growth opportunities. So if you want a policy that where you can grow your money, then the whole life insurance is the best option, especially with that that dividend option that some policies have. They usually have a fixed interest rate, and like I said, that money can be withdrawn while you're still working. So variable life insurance policies also provide permanent coverage while offering even more flexibility. And this is because it enables you to invest in the savings portion of your policy. That might include bonds, money market mutual funds, or stocks. However, variable life policies can pose a greater risk because it could decrease your cash value and your death benefit if your investment underperforms. So that's another thing that you have to look at. But you can't go wrong with no coverage. I mean, some coverage is better than no coverage. A whole bunch of sums beat a whole bunch of nones. So that's it for my review of life insurance. Term versus whole life insurance. And what's the difference? The basic difference is term life insurance covers you for a term, whole life for your whole life. Term life insurance, cheaper premiums, whole life, more expensive premiums, but they have a savings account vehicle that helps you grow your money in that policy. Also, term life insurance doesn't allow you to borrow against it, but some term life policies allow you to recoup some of that money that you put in that policy over the term that you have that policy. Whole life insurance, you can borrow against it. You don't have to pay it back. You pay it back through time while you're paying your premiums, or whatever you have paid already, you can take that money out and use it for whatever you need. Okay, so thanks for watching. Thanks for listening. Please share, subscribe, like the video, and I'll see y'all on the next one. Peace.